Hey there, Nathan with nathансoliday.com, and I wanted to do a short video on to answer the question of do I need a good credit score to buy a house? And I've been in the mortgage business for over 20 years, and we've helped close to probably 2,500 different individuals either be able to buy a home or refinance a home over that time. And the number one question with every one of those home buyers and homeowners has been, do I need a good credit score? Or what kind of credit do I need to be able to qualify for this mortgage? And so, whether you're working with me as a loan officer or another lender throughout the country, that is going to be the number one question that not only the loan officer is going to ask you, but if you're looking to start buying, start looking for homes, the real estate agent is going to ask you the same thing. Do you have good credit? How does your credit look? Are you pre-qualified and that type thing? So, a pre-qualification always starts basically with checking a credit score, and kind of seeing what that basically the probability of you making those payments in a timely manner when you buy a home, and then also is it going to go into default in some way? So every lender that is looking to basically write you a check and write the seller a check for the home that you're looking to buy, they want to have that assurance that you are going to be able to make those payments. And a very good way historically for them to figure that out is to be able to look at your credit profile and your credit score. Now, to answer the question of do I need a good credit score to buy a home is a little different answer than that. The answer is not necessarily. You can have a little lower credit score than what maybe that good range is that we're going to talk about in a few minutes and still be able to buy a house. Okay, so there'll be some different ramifications for that, but it still may be possible to buy a home, and we're going to talk about that in just a second. So when we're thinking about do we need a good credit score to buy a house, we first want to kind of look at what is a good credit score. So when you think about that, you kind of look at the different ranges. So the credit score ranges basically for a mortgage, can range anywhere from a 300 to an 850 credit score. The 300 being the lowest score you can have, the 850 being the best score that you can have. And there's a few out there that are in that, close to that 850 range, but it takes a lot of work to get to that point. But when you look at basically kind of that range of the 8 to 850 FICO, credit score, that's basically an exceptional credit score. So if somebody's in that range, they're obviously going to qualify from a credit standpoint to buy a house, and that's also going to allow them to be able to get the really good interest rates that would be available for the program that they're working for and that type thing. So an 8 to 850 is definitely exceptional. A very good credit score would kind of be that range from a 740 to 799. It may not be exceptional in that range, but it's still really good, and you're still not going to have any issues from a credit standpoint to be able to qualify for a loan. Now, keep in mind there are other qualifications besides a credit score that you need to be able to buy a house. But when you're thinking just in that credit range only, that 747 to 799 is still a really good score. Kind of the next range down is basically in that good category that we're talking about. So a 670 to 739. Again, that's a score range that could still help you qualify or allow you to qualify for a house and a home loan. So it's still, even though you're not in that really high 700 range, that's still good, and so it still allows you some opportunities there to be able to buy a home, if your credit score is in that range. Now, once you get below that in that 580 to 669 range, you start to run into some different things when it comes to qualifying for a house. So, when you're in the higher ranges, you can qualify for pretty well any program that's out there, again, from a credit standpoint. But when you start to get lower, then you start to see some restrictions and different guidelines that come into play that could cause you to not be able to qualify for a loan. So that the way I've got it broken down on the screen here is basically a fair credit score is 580 to 669, but you'll start to see some different breaks in those credit scores, whether it's a 600 to 620 or 620 to 640. You can still, in those ranges, still possibly qualify for a house. There's going to be, again, you may be able to be paying a little higher interest rate, or you may have to show that you've got a little more money in the bank, some more assets in some way, or even if you're on the lower end of that, you also may need a cosigner, but you could still possibly buy in that way. So some things to think about there. If you're in the poor range, the 300 to 579 range, you've got some work to do to be able to buy a house. with FHA, they actually would, with an FHA loan, they would actually allow you to go down lower than that if you can find a bank or a mortgage lender that will go that low. There are a few out there, but typically you're going to want to be at least over that 580 to be able to have a really legitimate chance of being able to buy a house. If you're much below a 580, you want to kind of spend some time working on your credit and building that up, whether you do that through secured, credit cards, getting a good pay history on some credit and things like that, or really just even kind of cleaning up some old debt that you may have on your credit report and kind of start from there. So you may want to, try to buy a house this month, but if your scores are in that lower range, it's going to take a little time to be able to, get those to a point to where you could qualify there. So with that in mind, just kind of a basic overview of, how your credit score can affect your down payment. The down payment is another big question when you're thinking about buying a house. You may have a limited amount of funds that you may have to be able to buy. So whenever you think about kind of that correlation, there is a strong correlation there of how your credit score is going to determine the amount of down payment that a bank or a lender is going to require there. So let's just look at a few of these. So with the conventional loan, the first one on the list, that's basically with the Fannie Mae program, and that's a loan that is probably one of the most popular ones. Obviously, it's been around for years and years, and they actually allow you to go down to a 620 credit score with that program. But you're going to probably have at least a 5% down payment in that situation. There are a few situations where you may be able to do a 3% down. But if you do a lower down payment like that, then you will have mortgage insurance. So mortgage insurance is going to be an additional fee that you're going to pay each month on your payment, basically because you're doing a lower down payment. Now, mortgage insurance doesn't necessarily have to be considered a horrible thing. It's sometimes a necessary tool to be able to get you into a home, a little quicker than if you actually saved up your 20% down payment. So mortgage insurance again is very helpful to be able to allow you to buy a house, without having $40,000 or $50,000 down, on a $225,000 house. But on the conventional loan, if you're in that 620 to 640 range and you're doing a conventional loan, your interest rate or your closing costs are going to be higher on that program if you're in that lower range. So again, we talked about ramifications a little earlier in the video. You could probably still buy with a 620 credit score, but you may pay a little more money for that. And when we think about paying, a little higher interest rate, a little higher closing costs and that type thing, even though you're doing a 30-year loan, you don't necessarily need to think about that as you're stuck for 30 years, because you can always look at possibly refinancing, a loan when you get some increases in your credit score and that type thing. So it all depends on what the market is doing and where interest rates are and all that good stuff. But keep that in mind. That's, again, something that even though you may buy a house today, you may be able to refinance that in a couple of years and lower your payment then. So it's all in kind of your strategy in your budget as far as, what you're looking at financially. With FHA, again, I mentioned earlier, they'll go down to lower than a 580. I've just got the 580 credit score here because that's what we offer, with my company. So if you have a 580 credit score or higher, it's very possible that you could buy a home with 3.5% down payment. Now, there's other factors that play into it, but kind of the minimum credit score with FHA that we have is that 580 credit score. With VA, kind of the same thing. We can do a VA loan down to a 580 credit score as well, and that's with zero down payment. So if you're a veteran, first of all, we want to thank you for your service. And, one of those benefits of having your VA eligibility when it comes to buying a house is that low down payment or no down payment. And then also there's no mortgage insurance on that loan as well. So it can definitely be a good option, if you're a veteran and you have your eligibility there. And we can help you with that if you have any questions along those lines. One program that we do a lot is the USDA loan. USDA is actually through the Rural Development Department and with the government, and we can do those down to a 620 credit score. And the neat thing about that is that can be with zero down payment. Okay, so if you're in that 620 and above range, and if you fit into the income guidelines and the area or location guidelines that USDA allows, it can be a great option for you to be able to buy with no money down. The nice thing on the USDA, your interest rates are going to be, if you're in that 620, lower tier, Your interest rates are going to be higher, but still not as high as they would be with a conventional loan if you were in the same range with the credit. So again, if you're in that low 600 range, don't get discouraged. There could be some possibilities and opportunities for you to be able to still be able to buy a house. You just want to make sure that it fits into your budget and what your financial goals are. There's some other programs out there. So a lot of the state housing programs, every state's different. So this is just kind of a general statement here. But state housing programs, most states have down payment assistance programs, and they look for a 640 to 650 and sometimes 660 credit score to qualify for those. But it could be possible that your state may allow a grant for the down payment, or maybe even just do a full, like a second mortgage for the down payment, depending on what state you're in. But that can still be a great option for you. So like, for example, the USDA loan is more for, homes that are located outside of a larger metropolitan area, kind of in the suburbs or even out in the country in some situations, to where the state housing programs, typically you can buy with a low down payment, in those city limits and bigger metropolitan areas. So just something to think about there. It's just a different option. Not every lender offers those. So you want to ask your loan officer to see, if they have that program available in your state that you live in. For example, our company, we're licensed in 33 states right now, and we have the state program for just about every state. So if you have any questions along those lines, feel free to send me an email or a message. I'll be happy to let you know if we can help with that. And then one other program that's starting to gain some popularity is the bank statement program. So the bank statement program is typically for self-employed borrowers, but there's a couple investors or lenders out there that will allow you to actually buy a house without W-2s and without pay stubs and things like that. And so for a self-employed borrower, this could be a great option because basically you would show 12 months of your bank statements or 24 months of your bank statements, and they're going to look at those deposits and they're going to use basically a percentage of those deposits to qualify you on the, as your income that you have. Now, the nice thing is a lot of those, require a 640 or 660 credit score for that program. Some are even 700, but there are a few that will allow you to go down to a 620. So if you're a self-employed, buyer looking to buy a house, but you can't really prove your income because of all of your deductions and things like that you do for taxes, this could be a great option for you to look at. And again, if you have any questions on that, just let me know. I'm happy to help there. Now, typically the down payment on that program is more, so typically 10 to 20% down. But if you've got some good, deposit history over that 1 or 2 year mark, that could be a great option for you. So that's kind of, hopefully that answers the question of there, do I need a good credit score to buy a house? As you can see, you can be on the lower side of that and still qualify. And still have some options there. So if you have any questions, we'd love to help you with that. If you look below the video, I've got a link to basically a home buying survey or a home buying quiz that you can go through and basically kind of click through that, and we can take a look at it and let you know what your chances are of being able to buy a house, with your credit score that you have. So again, check out that link. Be sure to like the video too, just to help us kind of spread the word about our business. We would appreciate that. And feel free to call the office with any questions or text us, and we'll go from there. All right. Have a great day, and thank you.